Imagine walking into an open house and seeing a lineup out the door again, something we hadn't seen since the peak of the pandemic market. After months of sluggish sales, Canada's housing market is finally showing signs of life. Home sales have climbed for 5 straight months in a row, sparking cautious optimism among buyers, sellers, and investors. But here's the twist. Prices aren't following the same trend everywhere. Some markets are heating up, while others are still cooling, leaving Canadians wondering, is now the time to buy, sell, or wait? National home sales have been on a roll since spring, with activity rising steadily through August. The Canadian Real Estate Association, CREA, reports that the number of transactions is up month over month across much of the country, led by strong rebounds in Montreal, Vancouver, Ottawa, and several mid-sized markets. This rebound is partly due to growing buyer confidence that interest rates may soon decline, as the Bank of Canada hints at possible rate cuts to boost affordability. Mortgage brokers are already reporting an uptick in pre-approvals as buyers prepare to re-enter the market. But don't be fooled. This isn't a return to the frenzy of 2021. Today's market is more balanced, giving buyers and sellers time to negotiate and make thoughtful decisions. The price puzzle. Why values are stuck in neutral. Here's where things get interesting. Despite rising sales, prices are not climbing as quickly as many would expect. The MLS Home Price Index, HPI, a benchmark measure of home values, has remained relatively flat year over year. Vancouver and Montreal. Prices are holding steady with slight month-over-month increases. Toronto and surrounding GTA. Prices are still slipping in many segments, especially detached houses, which remain well below their 2022 peaks. Prairie provinces, Calgary, Edmonton, Saskatoon. Prices are relatively stable, and in some cases rising modestly due to strong interprovincial migration and job growth. This mixed pricing picture is the result of 2 competing forces. Higher inventory. New listings have surged, particularly in Ontario and British Columbia, which gives buyers more choices and keeps bidding wars to a minimum. Pent-up demand. After sitting on the sidelines during high interest rate periods, many buyers are returning, preventing prices from falling too sharply. Regional highlights. Toronto and GTA. Toronto's market remains the most closely watched. While sales volumes are improving, price growth is still under pressure. Detached homes are seeing the largest discounts compared to their pandemic highs, while condos face oversupply challenges due to record construction completions. Vancouver. Vancouver is experiencing a more balanced market. Demand is rising, but price gains are muted thanks to higher inventory and affordability constraints. The luxury market is performing relatively well, driven by international buyers and high-net-worth Canadians looking for long-term assets. Calgary and prairie cities. Calgary continues to be a bright spot, with population growth, strong energy sector employment, and relative affordability keeping prices resilient. Detached homes in Calgary are in high demand, and the city's inventory remains lower than the national average. Atlantic Canada. Markets like Halifax and Moncton are seeing slowing price growth after years of double-digit gains, but demand from out-of-province buyers is still present, particularly from Ontario migrants seeking lower costs of living. The role of interest rates. One of the biggest factors shaping today's market is interest rate policy. Over the last 2 years, higher borrowing costs cooled housing demand significantly. Now, with inflation trending lower, economists expect 1 or more rate cuts in late 2025, which could further energize the market. However, experts caution that even a modest cut won't dramatically restore affordability. It may simply bring more buyers back, leading to more competition without major price relief. Supply and policy changes. Government action is another major player in this story. Ottawa recently announced the creation of Build Canada Homes, a federally backed agency designed to fast-track affordable and middle-income housing projects. Combined with rising purpose-built rental construction, this could help address supply shortages over time, but real results will take years to materialize. For now, sellers are still holding power in some regions, while buyers are gaining leverage in others. What this means for buyers. Do your homework. Don't assume prices are rising everywhere. Research your city or neighborhood market specifically. Get pre-approved early. Lock in a mortgage rate before potential cuts bring more competition. Look for opportunities. With inventory climbing, there's room to negotiate, especially on homes that have been sitting on the market. What this means for sellers' price. Realistically, overpricing is a common mistake in a mixed market and can lead to long listing times. Stage and market strategically. With buyers having more choices, presentation matters more than ever. Act before rates drop. Further, more buyers may re-enter the market soon, but that also means more competition from other sellers. Canada's housing market is no longer on pause, but it's not on fast forward either. We're entering a more balanced, data-driven era where careful timing and strategy will make the difference between a great deal and a costly mistake. What do you think? Will prices finally turn upward if interest rates drop, or will the extra inventory keep things cool? Drop your thoughts in the comments. Buyers and sellers alike want to hear your take.